Welcome to the closing beat, everybody. Happy Thursday already. Welcome to our stock market update show. Kind of just a fun, laid-back show where we cover the stock markets, go over the good, the bad, and the ugly. And I thank you for joining us here. We're financial advisors here at Jazz Wealth. No need to do the sales pitch today. In-N-Out Burger. It wasn't Jack in the Box. Hey. He's got his headphones on. It was, I haven't been to Jack in the Box. In-N-Out Burger, that was the one. Yeah. Sorry. If you saw the Outside the Virus show today, a little bit off beat. It's been one of those days. We were talking about Jack in the Box. I haven't been there. It was In-N-Out Burger. In-N-Out Burger. Anyways, where were we? Hey, we're playing a game. It's called Guess the Dow. jazzwealth.com/guess the Dow. If you could tell me where you think the Dow is going to close next week. Closest without going over, we'll send a $100 gift card to you. And, well, that's pretty much it. Tonight, we got a class for customers. I got the goods tonight, right? We're going to do some very interesting studies, lots of data. Very simple. I don't try to scare people with this, but we're going to be covering the current state of the market, some studies and things that we're looking at. You're going to be super impressed when not by me, but by the data. The data, exactly what the market does historically is exactly what it's doing now. So we'll go over that, and then also what's going to happen going forward. So we'll go over that as well. And that's basically it. Let's dive into this today. We've got our Jazz Artist of the Week, Mr. Brian Bromberg. He's got a song. He's a bass player. Plays killer bass. Mr. Miller is one of the songs there. Got a lot of good horns in there as well, but the tribute is to Brian Bromberg, the bass player today. Hey, let's go over here and take a look at the market. S&P 500 is actually up quite a bit after hours, but throughout the day today, it was mostly a quiet day. We had a horrible day in terms of economic news, just like we had yesterday. So the markets looked at that. And again, I thought they kind of held up well through the what could have been a reason for another day for a pretty decent sell-off. We got jobless claims that came out today. I'll just show you. If you're keeping score at home, you want to take a look at this. We're over 22 million jobs lost in the last 4 weeks. Jobless claims came in a little bit lower than expected, but still 5.24 million. That's officially the third highest number on record. If you want to see the second, that'd be last week, and the highest would be the week before if you're keeping track there. But that was horrible, right? You got housing starts. They were the lowest they've been. What'd you put on the... I guess the lowest since before Dustin was 2 years old. That would be 81. Housing starts fall 22%, basically, is what the moral of this slide is trying to show you here. Down 22%. You look all the way back. We haven't seen numbers like this in quite a while. Severe downturn there. That's bad news, right? I mean, that's a reason for the stock market to sell off. You also had the New York decide to extend the coronavirus shutdown, basically, up there until May 15th. So everybody's got to stay home again. Manufacturing numbers came in, plummeted again, and just not very good, right? Horrible numbers there. All a good reason for the markets to sell off, but they didn't sell off today. Why? Because you got tech out there. Tech led the way today. Here's the NASDAQ moving higher here. That's going to be fresh highs in the short term for them. The S&P lagged behind just a little bit. The Russell 2000 was the weakest. The tech was the broad space today where everybody was focused. Very tight range day in all the other major indices, at least through the normal market hours there. And the moral here is money continues to go into the tech stocks, and in particular, what they're calling the stay-at-home stocks. I believe I got a chart here. Yeah, I got one for you. Here's a list of the stay-at-home stocks, most of them that are included in the list there. And you can see by this chart that I put together with the performance since the virus high, that'd be February 19th. The pink line down here at the bottom is the S&P 500. Your stay-at-home tech stocks currently outperforming the market by some degree or another. You should be able to see those fairly nicely on the charts there. I hope so. Anyways, so what you have here, you've got a recipe for, well, the market's actually up after hours, so we're up about 2% after hours here. So the S&P at least recovering some of yesterday and all of today's little pullback there. Those lights back there that you see, it was one of these days. They were red for a while, then they were green. Then they were red for a while, then they were green. They just change whatever the market's doing. They're supposed to anyways. But basically it was one of those back and forth type days if you're taking a look at the stock market today. We had a video yesterday, the stimulus bill I put out there. I'll cover that in a minute, but I did a video on the new stimulus proposal out there. I won't say bill. It's a proposal out there, and get your opinion on that. But also, tomorrow we've got our video coming out, a study that we did on should you buy stocks that are getting government support. So what this would mean is, for example, should you buy American Airlines, Delta Airlines, Carnival Cruise eventually, names that have gotten support from the overall, the government, money in one fashion or another. So we look back to see other previous times, looking back at Chrysler, we looked at AIG, to just name a few, Citigroup in the mix there, just to see the performance when they got the stimulus. Was it a worthwhile investment for you to participate? And then looking out further in time, what happened to the price of the stock over time? Was it a worthwhile thing? I hope you'll check that video out tomorrow on our YouTube channel if you're interested. Let's do the sector breakdown here. Got to get ready for our class tonight, so I don't want to take too much of your time. You got financials. They lagged behind today. That's why the stock market was indecisive throughout the day. Tech led the way. You need tech, you need financials. You only had one of those today. Tech was really strong, so don't let me discourage you there. But financials just didn't participate. Down about 2% there. Broad weakness. You got JP Morgan lower on the day by 4%. Oh, that's not good. Wells Fargo down on the day 5.5%. I'm sorry, Citigroup. Wells Fargo down on the day, about basically the same there. That is the weakest one, by the way, out of the major financials there. In terms of being closest to its all-time low, if you're interested in that. You had the other, Morgan Stanley did okay today, considering they reported earnings. Morgan Stanley came out, they missed by 10 cents. Revenues were a little bit weaker than expected. All in all, not too bad, considering what we saw from the other ones there. Go over to transports. There you go. Lost about 0.25% on the day. This is going to be mostly because of your airline stocks. United Airlines down 11%. Sorry, not 4%. What are you talking about? Down 11% on the day. Delta 6%. Southwest Airlines, do you like discounts there? Should you buy these stocks that are going to have government stimulus? I'll tease the video for tomorrow. Also in the space, in the IYT, which is a transportation ETF you can look at there, you had Avis, which is ticker symbol CAR. They were lower by about 10% because Hertz, down 15%. Hertz is actually going to be looking for government money. I will maintain that as individuals and American citizens or citizens of the U.S., we are asked to have 3 to 6 months emergency funds all the time, right? Fellow Dave Ramsey? Sometimes even more. Susie Orman, Clark Howard, all those people that cover this, you're supposed to have emergency funds. Why don't these guys have emergency funds? Why are Hertz out there like, oh, okay, well, good thing we planned for a rainy day. So anyways, that's the reason that your rental car companies are down on the day, and that hurt the transportation sector as well. Let's move on. Healthcare continues to be the strongest recovery stock, meaning it's recovered the most of all the sectors out there. I've shared charts with you in the past on that, other shows. Higher yet again, continues to hold the record for the best recovery sector. You had a lot of news here today. United Healthcare continuing off the earnings there, almost back to new highs. By the way, Abbott Abbott Labs got the biggest excitement today. They're ramping up their coronavirus production, and they're actually, I think, started shipping out more, double as many tests going out today. So that somehow they were able to get that done. That got a lot of attention throughout the day. In consumer discretionary, that'd be your XLY if you want to follow along. The blue line is the 50-day moving average. Currently struggling to get over that. Still added 1% on the day today. To be truthful, Amazon makes up 25% of the consumer discretionaries there. 4.3% because everybody's shopping on Amazon, and we've become this sort of, remember FANG stocks? When FANG stocks were all that popular, they all took off. Everybody just started running for FANG stocks. Now it's the stay-at-home stocks. I saw a few other acronyms out there, but you got stay-at-home stocks, which include Amazon. And so because that makes up 25% of the space, that one did well. Point out a couple other things here. General Motors was holding the sector back overall. Las Vegas Sands was another one, down 2.5%. Marriott Hotels actually almost finished positive on the day. That one's holding up pretty nicely, actually, considering, well, all things considered. Down 2% here for the price of Ford, and so those were some of the weak ones in that space if you like looking at the weakness. Consumer staples, there you go. These are the things you need through all economic conditions there. Still under the 200-day moving average. There were a couple standouts there. Kraft Heinz got above the 200-day moving average. That's the first time since about late January that it's been able to do that. Costco, we'll cover that in a minute. They raised their dividend. The stock price darn near almost to recover the highs from the coronavirus drop. Interesting stat, by the way, we covered on Outside the Virus, a show that we put on YouTube now. From here, you can see it. From this coronavirus high to the coronavirus low, which is how we're kind of describing everything lately, the stock only fell about 16.5%. But right down there, that's not bad considering how bad everything else fell. And look, it's almost recovered all of it. You can imagine Costco doing well. They've gotten really pretty slick with how you go through the stores now, making sure that you're social distancing and everything. Also, Hershey. We don't talk about Hershey's enough, right? Hershey's up 2% on the day, still under the 200-day moving average, but that's what you got. Industrials, there you go, down about 1% on the day. Weak, pretty much broad weakness there. Boeing's going to be one of those. Boeing lost about 8% today. Because I mentioned the airlines a minute ago, they're all projecting lower travel demand. United Airlines actually cut their flights in May by 90%, and they think they're probably going to have to do the same in June. 90% less flights. Well, that's obviously not good for Boeing, because if you're not using the planes as much, you don't have to buy newer planes sooner, right? You need to upgrade, and there's no need to buy more planes if you're not even using 90% of your existing planes. Okay, so you got oil lower on the day, convincingly below $20 today. It basically held below $20 all day long. And so that took down some of your other oil categories. Your oil explorers down 4.5% today. Your oil service stocks, they were down on the day. By the way, this is a reverse split. If you're looking at your account and you're going, oh my God, I'm rich, right? Not the case. You are not rich. So if you happen to sell on that pop there, it doesn't matter. I mean, you can sell, but it's a reverse split essentially for that. The chart should update here in a couple days. It takes a little time for that to figure it out. Okay, that's major sectors there. Let's go on to individual stocks. You've got equity residential. Remember we covered these guys, what was it, last week, going over some of the REITs in particular. What do they do? We talked about some of the data center REITs. We talked about these guys. These guys came out. They've got about 80,000 apartments across the United States. I bet you it's a little higher by now because I think they were closing on a few of them. Anyways, let's just assume 80,000 units there. They actually came out and said for the month of April, you know how everybody's concerned that nobody's paying their rent? They said for the month of April, we actually collected 93% of all rents on time. The other 7%, they're working with those people on payment options, but they said they expect the same for June as well. Because of that, they actually raised their dividend. I've got a chart for you. Here are all the stocks in the last month that have raised their dividend. You'll notice Equity Residential is one of them. What we did is we put the company, the ticker, what their dividend was, what their dividend is now, and the new yield, at least as of when I put this together. So if you're interested in stocks that are actually raising their dividends, you notice Costco is one of them. Just mentioned that a second ago, and we'll cover it again in a second. But they raised their dividends 5 cents, almost paying out 1%. You can take a look at this and see if any of these are stocks you own and you're happy to be paid the higher dividend given the volatility that you're expecting and having a great time with, I'm sure, in the overall market there. Moving on, we've got the number of stocks making new highs today. 14 new highs on the day. This is actually all the stocks from the virus chart that I shared the other day, and I keep good records here. There you go. All of the stocks on the new high list, besides one of them, came from this list. These are all the stocks that are officially above their virus highs, which is the February 19th area there. Akamai Technologies, AKAM is a ticker symbol. They get added to this list today. They had a little blast off there. If you take a look at AKAM, this is a cloud security service company if you're curious what they do. You've got break to new highs today, up 5.5% on the day. And so I believe it got a couple upgrades. You got a $115 price target by Nomura. So that was very helpful on the day. But again, all the other highs for the day came from this list here. 68% of the S&P 500, that would be names that are not on this list, have to gain at least 20% to get back to their virus highs. Remember, the number was 71% yesterday, so we're moving in the right direction-ish, right? You got two new lows on the day. That's going to be Franklin Templeton. BEN is the ticker symbol if you like looking at the weakness there. And Diamond Offshore was the other one that broke to lows, broke hard to lows, by the way. Very bad day for them. They need a 90+% rally. I think it's almost 94% they will need to get back to their pre-virus highs if you care or want to look at that. All right, let's look at some of the news outside the market, but more particularly focused on the virus there. I keep trying to pull up this stuff for you guys so you can see what companies are adjusting and why they're adjusting. Amazon closing warehouses in France for the next 4 days, safety concerns. Costco raised their dividend to 70 cents. That's actually good news that's virus related. Alphabet, or Google, is going to be slowing and then eventually stopping their hiring through the rest of 2020. Hertz looking for a government bailout. Redfin, the real estate company, says that home buying is down 25% when compared to last year. Obviously, that's not good, but confirmed by the housing numbers we saw earlier. United Airlines, they got their May flights cut by 90%, probably do the same in June as well. And Simon Property Group's horrible day for them, right? I looked at that earlier. Simon Property Group's just a bad day, down 13%. Remember how I keep sharing every day, there are these retailers and these companies that are negotiating or not paying their April or May rent. And who does that affect? Simon Property Groups, right? That's one of them there. All right, moving on here. We'll wrap it up with tomorrow's earnings. You got Kansas City Southern, Regions Financial, Schlumberger, State Street, and IMAX is reporting tomorrow. And no dividends that are of any interest to report. And tomorrow, Yeti will take its place in the S&P 600 if you're interested there. So I'll take a chance here to try to answer some of your questions, and then we'll move on. Get ready for our class tonight. Yeah. I love it. How about Royal Caribbean? What about it? How about Royal Caribbean? What do you got there? Down 8% on the day, hovering near lows. Are you trying to bottom pick? You like these discounted ones? Do you? Yeah. Oh, yeah, look at that. Colgate Palmolive. Did something go wrong there? Give me a second here. That's probably not right. I'll bet you that little guy is just off. Colgate Palmolive was paying out 44 cents, and I'm going to pull it up and see, where were they? Help you out here real quick, in case you own it and you're wanting to know. Colgate, a penny. That's probably why. It probably didn't pull up the fraction of a penny. Colgate was paying 43 cents. Now they're paying 44. Thanks, Colgate. Extra penny. I know. I see. I'm sorry. You got a lot of. You guys ask a lot of questions. Good for you. Is Visa in the same industry as Discover, the payment processors? Yep. When will Tesla be? Oh, I don't know. When will it be part of the S&P? I have no idea. I'm sorry if I'm missing. I think some of you guys are talking to each other. And can you check American Express? What are we checking? Give me some guidance here. What am I looking at? You want me to look at the price today? You like that pullback? Do you? Royal Caribbean will rise, but it is not as cheaper of a stock to buy. Okay. I gotcha. I see what you're saying there. Yeah, a little rally into the close there. Let's see what we got. There we go. It's not loading. Oh my gosh. Come on, man. My news feed is down. Give me a second to try to refresh it. I'll try to answer other questions. It should refresh on its own. I'll help you out. Jazz cryptocurrency. No. No. I can't think of anything worse in terms of getting in trouble by the regulators. We're SEC registered, so we report to the SEC, unlike basically all the other advisors out there. So we report on a federal level because we have customers all over the United States, and we have a lot of them technically according to them. So they're not really happy with crypto. Let's just say it that way. So there will be no such thing for us. I would not even mention it probably from this day going forward. I like to stay in their good graces, you know? Everyone is at home shopping on Amazon. We just bought something here the other day from Amazon because we couldn't get it anywhere else. Everywhere else that we looked was either out of stock or couldn't deliver it for like 3 weeks. Yep. And that's probably because of shipping rates. I don't know if you've seen shipping rates, but they are absurd. Yep. I know. My news thing is not refreshing, guys. I'm sorry. I don't have any after hours news for some stinking reason. Oh, let me try something. Let me try to trick it. Nope. Nope. I mean, it's almost there. Yeah, the White House put out their news guidelines. They officially put out their guidelines to reopen. It's very loose, by the way. Yeah, it's very loose. It's more of a suggestion. Yeah. No specific timetable that I can see, though. I would think that's not very good news, but it could be that my news is not catching up. Come on, man. I'm sorry, I don't know. I'm just going to have to pass on it. Come back to you. They're suggesting a 14-day downward trajectory in the coronavirus cases before you start phasing in a reopening. That's the White House suggestions. Coming in after hours here. That is blowing up my news feed, so financial related stuff is just getting washed away. Tim Cook over at Apple says he's unclear when employees might be able to return to their offices. He says that their offices will likely have temperature checks and social distancing, something they're already wanting to start working on. Yep. Finally got some numbers on the CARES Act. Officially $1.6 trillion added to the gap in the budget. Wow, we're going downhill fast in terms of good news. I'll wrap it up there. Did I see any glitches for the stimulus delivery? I didn't hear of any. In terms of anybody that's reported to me, any customers, I've had a lot of customers say, got my check, or I didn't get it. A lot of people that really needed it, by the way. I was glad to hear that, because I've heard from a lot of people that got the money that don't really need the money, and they admittedly say that, and they've got great intentions with the money, but I heard today from a lot of people that were in really tough situations, clients of ours that did need the money and did get the money. Yep. Are we going to have another stimulus? Yeah, they're working on it. They're working on it. It's a big one. I did a video on it last night just because the one that they're proposing is a lot. It is a lot of money. Yep. Oh, yeah. All right, I will wrap it up there, and I've been as useful as I can be for the day. I'll be back later, of course, for our class for customers there with the good stats. Got a lot more to put together, but we're going to make it short and clean. You know, keep the classes nice and short, but with a whole lot of data packed in the simplest way that I can explain it. And so grab a drink with me, come hang out in the speakeasy over there, and I will see you later if you're one of our customers. Thank you so much for watching. If you are just here watching, hanging out, we'll be back tomorrow to do it all over again, and enjoy the rest of your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.